Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Easter break for the Australian dollar failed to deliver further bullishness as the market approaches the topside resistance around 76.15, with firmer resistance seen above there at 76.50 to 60. Now, a couple of things to note is the fact that the bullishness has been derived from the figures that have been coming out of China. After recent figures from the US dollar denominated trade balance came from a negative 9.1 billion to a positive 164 billion last week, which initially drove the Aussie to its first rally. And then yesterday we had Chinese GDP quarter release, which was also stronger. The numbers edged up to 6.9 with a forecast recently at 6.8. Also to note that other numbers came in. Retail sales were stronger at 9.5 to 10.9. And also to take into note that the industrial production release came in higher, was recently forecasted at 6.3. However, came in at 7.6, and that's quite a firm result. For those trading the Australian dollar, we should keep a close watch to these key release figures, as China is Australia's #1 trading partner, and unexpected reading can quickly affect the direction of the Aussie. And as you can see here from the last couple of releases, we've seen a very firm bullishness. However, in light of the current pattern, I still expect to see from a technical point that any rises towards 76.15, as I mentioned, to 76.50-60, to draw supply and eventually see a move back towards 75.55. Beneath there, we'll give further exposure to the downside and come in at 74.95 and then lower towards 74.25-35. Well, the euro dollar, as you can see here, is still contained by the resistance of 106.75, and in light of the current supply there, I do expect to see this to cap the euro this week. A couple of things to note though is that the dollar index did briefly challenge that 99.90 support, which was recently contested there and respected, and as from the overnight price action, again was respected after settling this morning around 100.17. Now looking towards the top side, if we do see a break above 106.75, this would dampen the outlook for euro to the bear side and see a possible bullish stance up towards 107.30.40 to a cap around 108.10.15. But let's not get too ahead of ourselves and see how the market plays out. And while this level, as you can see here, has held quite well over the last week or two, and if we see a break beneath the support now coming in at 106.15, we would see a re-challenge of this level of 105.70, and a break beneath there does give further scope to the downside of 104.55 to 70. Well, the dollar yen story now finding a short-term base in front of that 104.40.80 region, with the downtrend now broken here. As you can see, we should expect to see further demand. Now a break above 109.30 would give further upside potential to a target of 109.80 figure before supply returning. Support on the day comes in now at 108.55 minor and firmer, where the recent buy interest came back overnight at 107.90. Well, the Great British Pound still fanning towards that top side, with the resistance now coming in at 125.85 to 126.30.45. A challenge up towards that top side should again see supply, with the initial focus returning back to 125.15, with the immediate support as minor. And the next level comes in at 124.45.55 and reassess from there. Well, the gold story did post a 5-month high overnight, rallying on towards the highs over 1,295. In light of the current rejection, as the market plummeted back towards the low of 81, could see further weakness into the trading session today. A break beneath 12.79 will give further scope to the downside to 12.73 and reassess from there. Any advances towards now of 12.89 to 96 should fail. And wrapping up with silver, where the break above 18.45 did fail and nearly posted a bearish outside range day. In light of the pattern, a break beneath 18.25 today would give further scope to the downside and bring in a target of $17.90. Any advances now should find resistance around that 46 region and up towards 50 as a supply zone. So that wraps up today. Thank you very much for joining me, and as always, the report will be released shortly.